Based on the historical data and forecast, Bitcoin shows a volatile trend with periods of upward and downward movement. The RSI fluctuating between 38.5 and 73.0 indicates that the asset has been neither consistently oversold nor overbought. The Bollinger Bands suggest periods of consolidation and expansion, with the price occasionally touching or crossing the upper and lower bands. Considering the recent downward trend and the forecast for October 14 to 20, 2025, predicting a slight downward movement, I recommend a short position strategy. We will enter a short position at $115,800, placing a stop-loss order at $116,700 to limit potential losses if the price unexpectedly rises. The target price for this short position will be $112,500, aiming to capitalize on the predicted downward movement. To optimize returns, I suggest a portfolio combining RSI, Bollinger Bands, and support/resistance levels. When the RSI falls below 30, consider a long position, with an entry price at the support level of $110,600, a stop-loss at $109,100, and a target price at the resistance level of $117,100. Conversely, when the RSI exceeds 70 and the price touches the upper Bollinger Band, initiate a short position with an entry price at $117,100, a stop-loss at $119,600, and a target price at $113,500. This blended strategy allows us to adapt to changing market conditions and maximize potential returns by leveraging the strengths of each indicator. Based on the historical data and forecast, Ethereum has shown considerable volatility. The price recently dropped to $3,740 and has been fluctuating between the support price of $4,010 and the resistance price of $4,450. The RSI indicates oversold conditions on October 11 and 12, with readings of 35.7 and 33.5, respectively. The Bollinger Bands suggest that the price is currently near the lower band, indicating a potential for a bounce. Considering these factors, I recommend a long position entry at $4,050. The stop-loss should be placed at $3,990 to protect against further downside risk. The initial target price is $4,210, aligning with the forecast price for October 15 and the upper end of the recent trading range. To refine this strategy, we'll incorporate a trailing stop-loss based on the Bollinger Bands. If the price reaches $4,210, move the stop-loss to $4,150. If the price continues to rise, the target price should be adjusted to $4,300 and the stop-loss to $4,200. If the price falls below $4,050, exit the position. This approach combines RSI signals, Bollinger Bands, and forecast data to maximize potential returns while managing risk. The portfolio will prioritize the long position with these dynamic adjustments for optimal performance. Based on the historical data and forecast, BNB exhibits a strong uptrend, consistently hitting new highs. The RSI values have mostly been above 50, indicating bullish momentum, and recently dipped below 60, presenting a potential buying opportunity. The Bollinger Bands show the price fluctuating within a channel, with the forecast suggesting the price will continue to move towards the upper band. Therefore, I recommend a long position strategy. We should enter a long position at $1,300, coinciding with the current forecast price and recent high. Place a stop-loss order at $1,250, just below the recent support level, to limit potential losses. Set a target price at $1,410, aligning with the forecast high for the week, aiming for a significant profit. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 50, it's a signal to enter a long position. When the price touches the lower Bollinger Band, it's another signal to enter. Combining these signals, we can enter at $1,300. The stop-loss order remains at $1,250. For the target price, we can use the upper Bollinger Band as a guide. The upper Bollinger Band is forecasted to be $1,390, so we set a target price at $1,390. This combined strategy leverages both momentum and volatility indicators to maximize profit potential while managing risk effectively. Based on the historical data and forecast, XRP has shown significant volatility with a recent downtrend. The RSI consistently dipped below 30 on October 12 and 13, indicating an oversold condition. The forecast for the next week predicts a continued downward movement, with prices ranging between $2.43 and $2.60. Considering the support price of $2.38 and the recent oversold RSI, I recommend a long position with an entry price of $2.43. Set a stop-loss order at $2.38 to limit potential losses. The initial target price should be $2.61, based on the recent high and the potential for a short-term bounce. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading near the lower band for some time, confirming the downtrend. If the price breaks below the lower Bollinger Band of $2.42, it signals further downside potential, and we should tighten the stop-loss to $2.40. Conversely, if the price reaches the upper Bollinger Band of $3.21, it suggests a potential reversal, and we can adjust the target price to $2.80. This combined RSI and Bollinger Bands approach aims to capitalize on short-term price movements while mitigating risk through strategic stop-loss adjustments. Based on the historical data and forecast, Solana has shown significant volatility, with a recent sharp decline followed by some recovery. The price is currently near the support level of $203. The RSI is fluctuating around 47.8, indicating a neutral to slightly oversold condition. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a bounce. Considering these factors, I recommend a long entry at $203. A stop-loss should be placed at $181, below the lower Bollinger Band, to protect against further downside risk. The initial target price should be $221, aligning with the previous resistance level and the middle Bollinger Band. To enhance the strategy, I propose a dynamic approach. If the price reaches the initial target of $221 and the RSI is below 80, consider moving the stop-loss to break-even at $203 and setting a second target price of $245, near the upper Bollinger Band. This allows us to capture additional gains if the upward momentum continues. If the price fails to reach the first target and shows signs of weakness, such as a break below the support level of $203, exit the position immediately. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dogecoin demonstrates a declining trend with increased volatility. The RSI consistently dips below 50, indicating a bearish momentum, and the recent drop to 33.7 and 31.5 confirms an oversold condition. The forecast suggests a continued downward trajectory, with prices hovering around $0.21. Considering this, I recommend a short selling strategy focusing on the oversold bounces. Specifically, when the price reaches $0.185, enter a short position with a stop-loss at $0.192 and a target price of $0.165. This strategy leverages the potential for a brief rebound from the oversold level before the overall downward trend resumes. To enhance the strategy, we will integrate Bollinger Bands. When the price touches the lower band around $0.185, it signals a potential oversold condition. We will enter a short position at $0.185, place a stop-loss just above the lower band at $0.192, and set a target profit at $0.165, slightly below the lower band to account for volatility. This combined RSI and Bollinger Bands approach aims to capitalize on short-term fluctuations while aligning with the prevailing bearish trend, maximizing potential returns with calculated risk management. Based on the historical data and forecast, TRON demonstrates a slightly downward trend, particularly evident in the recent forecast prices. The RSI consistently fluctuates, but has recently dipped below 50, indicating potential oversold conditions. Bollinger Bands show that the price is approaching the lower band, further supporting a potential bounce. My strategy will focus on capitalizing on short-term rebounds while mitigating risk. I recommend a long position entry at $0.312. Set a stop-loss at $0.308, just below the lower Bollinger Band to protect against further declines. A conservative target price of $0.328, aligning with the upper Bollinger Band and previous resistance levels, should yield a reasonable profit. To refine this strategy, I'll incorporate RSI signals. If the RSI drops below 30, indicating a strong oversold condition, it reinforces the long entry at $0.312. Conversely, if the RSI rises above 70, suggesting overbought territory, consider exiting the position or tightening the stop loss. The portfolio will allocate 60% of capital to this long position, with the remaining 40% held in cash to allow for opportunistic entries if the price retraces further. This blended approach combines technical indicators with price action analysis for a balanced and potentially high-return investment. Based on the historical data and forecast, Cardano has shown considerable volatility, with a recent dip to $0.646 followed by a partial recovery. The RSI consistently fluctuating around the 40s and 50s suggests a neutral to slightly bearish momentum, with brief oversold conditions. The Bollinger Bands indicate periods of contraction and expansion, reflecting the price swings. Considering these factors, I propose a strategy focusing on capitalizing on short-term fluctuations while mitigating risk. My recommended strategy is a combination of RSI and Bollinger Bands trading. Firstly, enter a long position at $0.685 when the RSI falls below 30, indicating an oversold condition. Set a stop loss at $0.632, aligning with the established support level to limit potential losses. The initial target price should be $0.73, coinciding with the forecast price for October 14, 2025. If the price breaks through $0.73, adjust the target price to $0.74. Conversely, if the RSI exceeds 70, consider a short position with an entry price of $0.87, a stop loss at $0.83, and a target price of $0.79. This multifaceted approach aims to capture both upward and downward price movements, maximizing potential returns while maintaining a robust risk management framework. Based on the historical data and forecast, Wrapped Beacon ETH has shown volatility with a recent downward trend, particularly evident in the sharp drop to 4,010 and subsequent recovery. The RSI readings fluctuate, indicating periods of both overbought and oversold conditions. The Bollinger Bands have widened, suggesting increased market volatility. Considering these factors, a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels is recommended. Initially, we will implement a long position when the RSI falls below 35, indicating an oversold condition. The entry price will be $44.60, with a stop loss set just below the recent low of 4,010 at $39.80, and a target price based on the resistance level of 4,790. To refine the strategy, we'll incorporate Bollinger Band signals. If the price touches the lower band, confirming the oversold condition, we enter a long position at $44.70. The stop loss will be placed below the lower Bollinger Band on October 13, which is $3,980. The initial target price will be the middle Bollinger Band, around $45.70. However, if the price breaks through the upper Bollinger Band and the RSI exceeds 70, indicating an overbought condition, we will close the position and consider a short position. The final portfolio will be a long position at 4,470 with a stop loss at $39.80 and a target price at $47.90, leveraging both RSI and Bollinger Bands for confirmation and risk management. Based on the historical data and forecast, Chainlink has shown a significant downtrend recently, particularly with the sharp decline to $17.5 on October 11, 2025, and continued downward forecast. The RSI indicates oversold conditions on several days, including 31.5 and 30.6, suggesting potential for a short-term bounce. However, the overall trend remains bearish. I recommend a contrarian strategy capitalizing on short-term bounces while managing downside risk. The Bollinger Bands show that the price is approaching the lower band, indicating a potential for a rebound. My proposed strategy is to initiate a long position when the RSI reaches an oversold level below 30 and the price touches the lower Bollinger Band. Specifically, enter a long position at $18.5 on October 19, 2025. Set a stop-loss order at $17.2, just below the established support level, to limit potential losses. target a profit at $19.9, aligning with the recent resistance levels and the upper Bollinger Band. If the price fails to reach the target and shows a further decline, close the position and reevaluate the trend. This strategy combines RSI and Bollinger Bands to identify short-term opportunities within a broader downtrend, prioritizing risk management with a clear stop-loss level. Based on the historical data and forecast, Immutable exhibits considerable volatility, with a recent sharp decline followed by a partial recovery. The RSI consistently fluctuates around the midpoint, indicating neither strong bullish nor bearish momentum. However, the forecast data suggests a continued downward trend, with prices hovering around $0.617 to $0.601. Considering the support level at $0.539 and the downward forecast, I recommend a short selling strategy. Enter a short position at $0.617, setting a stop-loss slightly above the upper Bollinger Band at $0.648 to protect against unexpected upward spikes. The initial target price should be near the support level at $0.539, aiming for a potential gain of $0.078. To capitalize on potential rebounds and manage risk, implement a dynamic strategy. If the price reaches the $0.539 target, take partial profits and move the stop-loss to the entry price of $0.617. If the price continues to decline and breaks below the $0.539 support, consider adding to the short position at $0.485, with a stop-loss at $0.539. The ultimate target price for this augmented position should be $0.4. This combined approach allows for both immediate gains and the potential for substantial profits if the downtrend persists, while carefully managing risk with strategically placed stop-loss orders. Based on the historical data and forecast, Virtual's protocol shows a downtrend with significant volatility. The price has been fluctuating around the support price of $0.706, with resistance at $1.01. The recent price action, particularly the sharp drop to $0.725 followed by a partial recovery, indicates increased selling pressure. The RSI consistently indicates oversold conditions, with values below 35, suggesting potential for a bounce. However, the forecast prices for the next week are consistently below $0.883, reinforcing the downtrend. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. My proposed strategy involves a buy position when the RSI dips below 30 and the price touches the bottom of the Bollinger Bands. For example, on October 10, 2025, the RSI was 29.4 and the bottom of the Bollinger Bands was $0.872. We can enter a long position at $0.875. Set a stop-loss slightly below the support price at $0.706 to limit potential losses. A reasonable target price would be the resistance level of $1.01, offering a potential gain of 1.01 minus 0.875 is equal to $0.135. If the price fails to reach the target and continues to decline, exit the position at the stop-loss level of $0.706. This strategy aims to capitalize on short-term bounces while mitigating risk with a well-defined stop-loss. Based on the historical data and forecast, Conflux has shown significant volatility, with a recent dip followed by a partial recovery. The RSI consistently dips below 30, indicating oversold conditions, while the Bollinger Bands show periods of contraction and expansion. The forecast data suggests a continued downtrend, hovering around $0.11 to $0.12. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. We will implement a strategy based on RSI, Bollinger Bands, and support and resistance levels. The primary strategy will be to buy when the RSI falls below 20 and the price touches the support level of $0.0991. The entry price will be $0.0991. The stop loss will be set just below the support level at $0.096. The initial target price will be the nearest resistance level at $0.139. If the price reaches $0.139, we will move the stop loss to break even. If the price continues to rise, the next target price will be $0.15. However, given the bearish forecast, we need to be cautious. If the price falls below $0.0991, we will short the asset at $0.12 with a stop loss at $0.124 and a target price of $0.0991. This combined strategy allows us to capitalize on both potential upside and downside movements, maximizing returns while managing risk. Based on the historical data and forecast, Lido DAO has shown significant volatility. The price plummeted to $0.807 on October 12, 2025, triggering an oversold RSI of 31.8, and subsequently rebounded. The forecast data suggests a sideways trend with prices hovering around $1.01 to $0.946. Considering the support price of $0.807 and the recent price recovery, I recommend a long position strategy. Entry price will be $0.93, placing the stop loss at $0.89 to mitigate potential downside risk. The initial target price will be $1.03, aiming for a quick profit. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band around $0.946, it signals a potential buying opportunity, aligning with the oversold RSI. If the price reaches the upper band around $1.03, it indicates an overbought condition, suggesting a potential exit point. Therefore, a secondary target price will be $1.06. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Render has shown significant volatility, with a recent dip to $2.38 followed by a recovery. The RSI consistently dipped below 39, indicating an oversold condition. The forecast suggests a continued downward trend, hovering around $2.94 to $2.84. Considering these factors, I recommend a long position strategy when the price reaches $2.75. Set a stop loss at $2.37, right at the support level, to mitigate potential losses. The initial target price should be $3.06, aligning with the recent high. To enhance the strategy, incorporate the Bollinger Bands. When the price touches the lower band around $2.77, it signals a potential rebound. If the price moves above the center of the Bollinger Bands around $2.84, consider adjusting the target price to $3.36, the resistance level. This combined strategy leverages both RSI and Bollinger Bands to optimize returns while managing risk effectively. The portfolio should be 60% RSI strategy and 40% Bollinger Band strategy. Based on the historical data and forecast, Celestia has shown significant volatility. The price has bounced between a support of $0.925 and a resistance of $1.38. The RSI readings have fluctuated, dipping into oversold territory, below 30, on October 11 and 12, 2025, indicating a potential buying opportunity. The Bollinger Bands suggest that the price is currently approaching the lower band, further reinforcing the possibility of a rebound. Considering the forecast for the next week, which predicts a decline to $1.04, a contrarian strategy focusing on short-term price swings is recommended. My proposed strategy is a combination of RSI and Bollinger Bands. We will enter a long position at $1.04, coinciding with the forecast low and the lower Bollinger Band touch. The stop loss will be set slightly below the support level at $0.92 to mitigate potential losses if the price continues to decline. The initial target price will be $1.19, based on the recent price action and the middle Bollinger Band. If the price reaches $1.19, we will reassess the situation and potentially set a second target price closer to the resistance level of $1.38, depending on the RSI and Bollinger Band signals. This strategy aims to capitalize on short-term rebounds while managing risk through strategic stop-loss placement. Based on the historical data and forecast, Curve DAO has shown significant volatility. The RSI indicates periods of oversold and overbought conditions. The price has tested the support level of $0.485 multiple times, and the resistance level is around $0.663. The Bollinger Bands have been contracting and expanding, suggesting potential breakouts. Considering these factors, I propose a strategy combining momentum and range trading. First, initiate a long position at $0.581 when the RSI approaches the oversold level of 20. Set a stop loss at $0.532, just below the lower Bollinger Band, to protect against a potential downward reversal. The initial target price is $0.663, the resistance level. If the price reaches the target, consider taking partial profits and moving the stop loss to break even. If the price continues to rise, a second target can be set at $0.73, aligning with the center of the Bollinger Bands. This strategy aims to capitalize on the anticipated upward momentum while managing risk with well-defined stop loss and target levels. Based on the historical data and forecast, Ethena exhibits a strong downtrend. The price has been consistently declining, with the forecast indicating further downward movement. The support price is consistently at $0.369, and the resistance is at $0.545. The RSI consistently indicates oversold conditions, fluctuating between 25.9 and 48.6. Considering these factors, I recommend a short position strategy. The entry price should be $0.471, placing the stop loss at $0.545 above the resistance level to protect against a potential upward reversal. The initial target price should be $0.369, near the support level, aiming for a quick profit. To refine the strategy, I will incorporate the Bollinger Bands. The price is currently below the lower band, reinforcing the downtrend. As the price approaches the support level of $0.369, I will adjust the target price to $0.391, aligning with the forecast for October 20, 2025. This adjusted target price balances potential gains with the risk of a price bounce. The combined strategy prioritizes a short position with a conservative stop loss and an adjusted target price based on forecast data and technical indicators, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Bittensor shows a clear upward trend, particularly evident in the recent surge to $445 and the projected prices exceeding $450. The RSI consistently moved above 50, indicating bullish momentum, with a peak of 70.8, suggesting a potential temporary overbought condition. The Bollinger Bands also confirm this trend, with the price frequently touching or exceeding the upper band. Considering these factors, I propose a long position strategy. We will enter a long position at $373, coinciding with the initial forecast price. To manage risk, we will set a stop loss at $354, just below the lower Bollinger Band, which acts as a support level. Our target price will be $455, aligning with the final forecast price and offering a significant potential return. To refine the strategy, we will incorporate RSI signals. If the RSI dips below 30 during the forecast period, indicating an oversold condition, we will consider adding to our position at the prevailing price, with a slightly higher stop loss. Conversely, if the RSI reaches 80, suggesting an overbought condition, we will partially take profits and tighten our stop loss to protect gains. The overall portfolio will be weighted 60% towards the long position at $373, 20% towards RSI-driven additions, and 20% towards profit-taking and stop-loss adjustments based on RSI signals. This blended approach combines trend following with momentum-based adjustments for optimal risk-reward. Based on the historical data and forecast, Synthetix demonstrates a clear upward trend, particularly evident in the recent price surge from $0.941 to $2.31. The RSI consistently fluctuates between 50 and 80, indicating periods of both buying and selling pressure, but overall favoring bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for significant price movements. The forecast data projects further price increases, reaching $2.46 by October 20, 2025. Considering the support price of $1.98 and resistance price of $2.67, I recommend a long position strategy. We will enter at $1.64, set a stop loss at $1.51, and target a price of $2.46. To maximize returns and manage risk, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. The primary strategy will be a long position triggered when the RSI dips below 40, indicating an oversold condition. However, given the recent upward trend, we will refine this entry point. We will enter a long position at $1.64, coinciding with the start of the forecast period and a relatively low price point. A stop loss will be placed at $1.51, just below the bottom of the Bollinger Band to protect against unexpected downturns. The target price will be $2.46, aligning with the forecast peak and nearing the resistance level. This strategy balances the potential for high returns with robust risk management, capitalizing on the predicted upward momentum of Synthetix.